afternoon, everybody. Welcome to the Daily Recap. I am not Scott Redler. I am Evan Lazarus. I want to welcome you to the market that just won't quit. We have really a very unique market situation happening here where, you have this sort of slow grind higher. And every day we seem to come in and the S&Ps seem to just tick higher day by day by day. There's not a lot of momentum in this trade. You haven't seen any sort of large, powerful intraday trades to the upside. But on the same note, it is a slow grind higher, and we are consistently making higher highs and higher lows. Now, that being said, I do think it's a very difficult trade to sort of get involved with right here, right now. And I'm going to go into that here. So let's take a look at the S&Ps. And before we get into the near term, let's talk about sort of the larger term. And the one thing that, I think needs to be discussed is buying new highs. If you were to buy new highs, in the market over here, you probably would have, paid a consequence. You saw a pretty substantial drawdown. Had you have bought new highs, when the market again exceeded those prior highs, again, drawdown. So I think as we make new highs here, which we are making, we have taken out our September highs, our September 2012 highs, be on a little bit of more high alert. Traders make money, and I don't care if it's a bull market or a bear market, by either buying pull-ins in strong markets or shorting bounces in weak markets, period. There really isn't much more I can say to that effect. So while it's very good and well, and the market has had a very continuous bid in it, and we're seeing strength, again, smart money is going to be made by looking for pullbacks and very tactically and strategically, as Scott always says, buying those tactical and controlled pullbacks. So be very careful with the market here, as buying new highs, like I say, can be a very dangerous proposition. It's not that we can't go higher or we won't go higher. It's that, can you quantify the risk by being a buyer today? And that's the point I think that I want to hammer home here with the recap, is that, yes, the market in the near term, we can go to the daily. And again, to highlight that fact, again, this is the prior September highs, September 2012, and the market has traded through those highs. And that's a very, very interesting proposition. And sometimes that in and of itself gets traders to want to be long or essentially chase the market. But this market has come from, much lower levels. So to be a buyer here, again, in my opinion, represents a higher risk situation. That doesn't mean we can't see higher in the near term, but I suspect we are not too far away from what could be a pullback. So be on alert for that, as again, the more sound entry in terms of risk will be after that pullback occurs. So let's keep an eye on how this market structure evolves over the next couple of sessions. Let's jump into another area, the banks. We're going to look at Goldman here. And again, Goldman, same type of thing. Goldman, banks have been leading the market, especially Goldman. Again, slow grind higher day by day by day. Haven't really seen much impulse here. Again, good for some of the longer term swing traders, day traders having a tough time getting themselves involved just because the momentum isn't quite there. But a nice smooth uptrend here, and I suspect that this will continue higher until such time that it doesn't. And I hate to say things like that because it's not definitive, but the reality of it is, this becomes to me again a good buy on a pullback, not at new highs. For those that are really more quicker intraday, short-term oriented, you could probably get another long trade here through prior highs around 146 or just above 146. And I don't see any reason right now that won't happen even as early as tomorrow. Alternative to Goldman Sachs, we're going to look at JP Morgan. Again, you're going to see the same predominant theme here. Strength, buyers, not a lot of momentum, slow grind higher. So you have to kind of approach these markets with a little bit of a longer duration. The day trades, that fast money, not quite there in some of these names. But again, higher highs and higher lows, still the predominant theme. Duration and trade expectancy just taking a little bit longer than I think most are accustomed to with some of these names. Bank of America, again, probably one of the ones that not making new highs, but definitely looks like a very controlled flag pattern. You could see another breakout potentially of that in the days to come. So keep an eye on that. Very controlled, buyable pullback, in my opinion, based on what I see right here, right now. Okay, so let's step away from banks. Let's talk about some of the notable earnings that we came into today. Primarily Google. Really a lackluster trading for some of these big gap up plays. You saw Google, IBM, ISRG, and we saw most of the gains in the stock come early in the session, gapping up from the 700 mark. We did, get through prior highs, right, by a little bit, just a little bit, but then tailing down into the latter part of the session today. So if we look intraday, you can see sort of how lackluster this trade was. This is Google. Most of the gains coming here in the first 20 minutes of the day, and then really just sort of a sideways trade until later in the session around 3 o'clock. You started to see sellers come in, pushing it back down. And what that means for now is that, we have to respect that this area, proved to be some sort of resistance mark. And again, going back to the daily, in line with back here in October, I think the one thing that I would say about this chart at this area represents a much higher risk long. A couple days of some sideways contraction, even a pullback to me would represent a lower risk buy setup than right here, right now. You have a lot of resistance to the left. If you look to the left, you'll see back in October, this is really the area that Google, really failed from. Back from the 750, 760 mark, we traded all the way down to 640. So up here, it's going to have to contend with a lot of overhead supply before legging higher. So manage your expectations here. And if anything, I'd look for a short-term possible pullback. Same thing in IBM. IBM, big topping tail today. Again, one of the stocks that gapped up on earnings, rallied up, basically almost filled this gap. And I'll show you this gap from back here in October, this big gap down. Well, we're now back up here. And again, a big ominous topping tail. What does that mean? Well, that means that, we saw early morning strength. Again, the first 20, 25 minutes of the day, right off the bell, straight up, only to sort of fizzle out and close in the lower part of the range intraday. Not a great trading day for some of these earnings trades, in my opinion. If you really didn't participate in the first 10, 15 minutes, which for my experience is never the path of least resistance, and not the smart money, not much to be had here. And lastly, ISRG, another notable standout, but same intraday action. Big gap up. We closed at 517 yesterday, trading 567 today. So huge gap up in price, but really a lackluster session. We did see as high as close to 580 and as low as 560. So a pretty wide range. But again, looking intraday, we saw some gains, but they, again, sort of tapered off in the later part of the afternoon. So, not really much of a trend here intraday. You got a couple, pockets of opportunity, but those opportunities, slowly fizzled out over the course of the trading day. From my experience, not a great earnings day trade. Generally, when you see these large gap ups, they tend to present themselves in good trading situations. Didn't really see it as much today, but we'll see. Give this trade more time. Let these trades develop. IBM, Google, ISR, any of these names. Give them time to build bases, to be constructive. If they're going to be good trades, like I tell all my students, and I actually have a live audience here today for our lab, good trades develop, they don't happen. So don't feel compelled to chase anything here. It's not going to be smart money, in my opinion. Today, news du jour, Apple earnings after the bell. Still Apple languishing. I do think, earnings could provide a spark to see some upside. Let's look at the weekly. I think we could see a trade back to maybe 550, 560 post earnings. Again, I'm just speculating. I don't recommend that for a trade. I don't think that I would, go at this with a real, heavy bias long approach. Weekly chart is downtrending. Daily chart is downtrending. But I suspect, because we made that new low here, we took out that 500 mark, and couldn't really hold lows, that could create a little bit of a short-term squeeze. And you could see price come back up into the mid 550s in the near term, if not higher. I mean, these are very powerful stocks. Let's see. As I speak right now, let's take a look, see if there are earnings here. Looks like earnings have been released since I started this broadcast, trading now 500. So, let's see what this amounts to. Again, this is the post-market, and this is a matter of 3 minutes. The stock has gone from 520 to 500 as I speak, possibly lower. So a lot of risk baked into this trade. So we'll see what this presents to us tomorrow. Apple seriously underperforming the rest of the market. As the market makes new highs, Apple, sitting at lows. So definitely a massive red flag and a major divergence there from what was one time very much the market leader for a long time. Lastly, let's wrap it up. Netflix, another earnings trade after the bell today. Right now, trading 135. The stock closed at 105, so up about $30 since announcing earnings. Earnings, obviously, very much what the street was looking for. So stock pretty much trading up in. This is a weekly chart, roughly up into this area. This is probably where we'll open tomorrow. Somewhere in this mid 130 range wouldn't surprise me. So keep an eye on some of these trades. Again, if you're looking to trade earnings or looking to get involved, right now the opportunity presents itself intraday. Use the VTF for those of you that are home looking for these tradable opportunities and some of these big gap scenarios. And lastly, we're going to end with a couple more symbols. RIM, Research in Motion. Big move in the last couple of days. You can see from basically $11 up to about 18. Let's go up a time frame. Let's look at the weekly. Back into an area of resistance. Well, how do I know? This area, again, if you look to the left, was the last time the stock basically rallied up and then basically went into that last move down to about $7 where it basically bottomed. So back into what I would call short-term resistance here at 17. Wouldn't surprise me if you look at the weekly here. I'm just trying to make it a little bit bigger, where we see a little bit of a pullback here, tailing down into prior resistance today. Here's a daily chart. You can see, yesterday we closed around 18. Today, reversing course a little bit, not heavy selling, but I suspect in the short term we might be a little overdone here, and you might see a little bit of a pullback ensue over the next couple of sessions. And lastly, 3D printing, DDD. It's been a great story. It's been a great story for the last few months. A lot of opportunity there. DDD, let's take a look at the monthly. This is a monthly, major upside here, pretty extended in the short term. For sake of transparency, I am short DDD. Intraday, a little bit of a reversal today. Nice big, this is a 60-minute chart, big move down. A little bit of a retracement here in through lunch and then starting to roll over later in the day. This could present an opportunity for a pullback here, possibly into the lower 60 area. At this point, I am short with stops right around 69.60, 69.75. So I am looking for a trade back to the lower end of the range. That would be sub 64, somewhere in this general zone. Again, for the more short-term traders, this is the daily. Again, way off the 21 EMA. Wouldn't surprise me if we saw, excuse me, a little, 2 to 3 day or possibly 3 to 5 day decline here as the stock, has seen huge gains. A little bit of a reversal bar today. So we'll see if that amounts to anything in terms of a short-term trade. And lastly, SSYS, the other name in that sector that everybody's been watching, seeing some selling there as well. So some profit taking there, not to be surprised or even unexpected. Again, the further up they go, there's going to be opportunity on both sides of the trade. Make sure you understand if you are trading from the short side, if you're looking at that in a strong tape, it's a much harder trade, obviously, because the forces are working against you. But as always, very, very good opportunity, especially in earnings season. This is really where active traders can thrive if you know what to look for and what to expect and why. As always, a planned trader is a profitable trader. I'm still Laz. I'll see you tomorrow. Have a great day. I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.